Minister Ebrahim Patel, Minister of Department of Trade, Industry and Competition. Not only DTI, DTIC. It has changed the names. And then we also have our Miss Trudi Makhaya. Trudi Makhaya, we all know, she is the economic advisor to our President Cyril Ramaphosa. So they will take us through the preparations. We'll first start with our Minister, Ebrahim Patel. After Minister, it will be Ms. Trudi Makhaya. From there, it will be our Q&A. And strictly, we want to emphasize, is on investment conference. Thank you very much. Minister?
Well, may I give a very warm welcome to members of the media and appreciate your attendance both here as well as the colleagues in Cape Town. I'd like to recognize Ms. Trudi Makhaya, who's the advisor economic to the President. I'd also like to recognize Mr. Yunus Hussein, who heads the Invest SA unit and is in the audience today. The purpose of the briefing is to share with members of the media and through you to the South African public details of the African Investment Conference. I want to recall that in 2018, President Cyril Ramaphosa indicated that as part of stimulating economic growth and getting greater levels of job creation, he would focus on creating an environment attractive to greater levels of investment. He set a target for us to say that South Africa must work together to achieve a 1.2 trillion rand commitment in fresh investment over a 5-year period. And he also appointed a number of investment envoys, eminent South Africans who take our story and share it with the world. And he announced that he would be convening on a periodic basis investment conferences. I want to recall also that in 2018, the inaugural or first investment conference was hosted, and that was a significant event in October. It drew more than 1,000 investors. In 2019, the second South African Investment Conference was held, again in Sandton Convention Center. It attracted widespread interest. We had investors from across the world and South Africa and the continent congregating in Sandton to engage with government and to make pledges on investment. We can confirm today that the third investment conference will take place on 17 and 18 November this year. I want to briefly cover the rationale and context within which the investment conference is being called, briefly talk about structure, and then hand over to Trudi and share with you some of the detail of the sessions that we'll be holding, the attendance, the format of the conference, in these times that we are in. So let me start with the rationale for the conference. When the President set a target of 1.2 trillion rand as pledges that we needed to secure from investors, he intended that to cover domestic investors and foreign investors. Investors in the private sector principally, also public investment. We've had about 664 billion rand of investment that was pledged in the first two conferences that were convened. Of course, COVID-19 has impacted on the investment climate and on economic performance, on global markets, and we now need to address that. So this conference is an opportunity to assess what progress we've made with getting that 664 billion rand from an idea in the mind of an investor to the point where bricks and mortar are hitting the ground, buildings and factories are being erected, mine shafts being purchased and installed. To date, and the President will be elaborating a little bit more on this, something 170 billion rand is already flowing through the pipeline. And our intention is to deepen that level of flow. Now, the context is a tougher context than a year ago. The United Nations, the UNCTAD World Investment Report for 2020 recognized that investment across the world, not just South Africa, but across the world, is going to be sharply down. They expect a drop of about 40% in FDI flows. They project that even next year in 2021, there would continue to be a decline in FDI flows, and they expect a recovery by 2022. And of course, they say the outlook is tentative and uncertain. The prospects of foreign direct investment recovering robustly and quickly depend on the duration of the COVID crisis and the effectiveness of policy instruments to deal with the various challenges and to mitigate the effects of the pandemic. They characterize the pandemic as a supply shock, a demand shock, but also a policy shock that affects foreign direct investment. For South Africa, our intention is to use the opportunity of the investment conference to showcase new possibilities, new opportunities in South Africa. So in an environment globally where sentiment is bearish, when people are cautious, when the pause button is pressed by many investors, we want to make sure that South Africa stands out and opportunities in the market are identified. Two critical opportunities present themselves. The first is the African Continental Free Trade Area, which is the most ambitious trade reform package that has been put together in this period anywhere on the globe, and it envisages potentially as many as 1.2 billion consumers who will be connected through a continental free trade area with significant manufacturing opportunities on the continent. In fact, it's been estimated by the World Bank that there would be, over the period of the continental free trade area by 2035, it would be adding annually something of the order of 7 trillion rand to the GDP of African countries, the continental, about 450 billion US dollars. So conference will be an opportunity to highlight this and to engage investors, because when you have a much bigger market, you no longer suffer the problems of scale. Small markets mean very little production run. You just produce for tiny markets, so your cost structure is high. And that's the advantage that Asian, European, and North American producers have. They've got these massive markets. And so we're trying to replicate scale to bring investors to the continent. The second big opportunity is the economic reconstruction and recovery plan that the President announced in Parliament. It identifies opportunities in infrastructure, new investment there that will be galvanized, and on localization, getting more products made here in South Africa. There are other elements to it, tourism and so on, that members of the media would be familiar with. And this is our opportunity. It's the first the package has been announced in Parliament for government to put the package as a whole to investors as a group, domestic investors and foreign investors. Now you may ask the question, is it wise to have an investment conference during a pandemic? And we thought about it and we decided to proceed. We decided to proceed because though these are challenging times, we are now shifting our focus to economic recovery and to reconstruction. And investment plays a critical role. And we think there are first mover advantages that can be obtained and that we need to get more going by way of the visibility of investment opportunities. Briefly on the structure, Trudi will deal with more of the details, but day one, the 17th of November, form of a series of focused sector-level discussions, and they would, for example, will have one session with a panel engaging on opportunities in the agriculture value chain. What more can be done? What can be localized? Where are export opportunities? How do we unlock the enormous market on the continent there? Energy clearly will feature in our thinking because one of the enormous constraints to deeper levels of investment, the cost and reliability of supply of energy. So that would be a focused discussion. A range of other ones, a particular conversation about manufacturing and the Continental Free Trade Area. We will look at the future, the digital economy. We will look at rebuilding small businesses and tourism markets. But as I indicate, Trudi will tell you more about it. Two of the conference, which will be really, if you like, the plenary, in old-fashioned pre-pandemic language, would be on the 18th of November. And on that occasion, it will be a hybrid. I'm going to leave for Trudi to share with you. And it will include a discussion with social partners. So we will have business and labor representatives sharing the platform with the president and engaging on what can be done and what need to be done. We'll also look at video footage of different projects that are currently underway, examples of successes. And we're going to be trying to think through what are some of the challenges, because when you call a conference like this, you also want to know the problems so that we are able to address those. What are the inhibitors on that 664 billion rand commitment off the ground? Much of our focus will be on consolidation, on making sure that which business pledged can be implemented, where there needs to be unblocking of a problem, some regulatory license that need to be facilitated, some challenge with access to, let's say, transport or water. That would be the kind of conversation, because it's often in these details rather than in the big that the problems manifest themselves. We will also have a profiling of new investment pledges by firms. We're not focused as much on fresh investment pledges because much of the conference will be to get that 664 billion rand implemented, but there are companies that are now ready to make some fresh pledges, and there will be an opportunity for them to indicate that. So broadly speaking, in a difficult time, we think those countries, those economies that can show a greater value proposition, a greater openness to fresh investment, and a preparedness to unblock and fix the problems that investors face, are more likely to find a higher level of investment. We need to do it, particularly now, given that globally FDI flows are likely to be lower both this year and next year. But there's also a conversation with South African investors and mobilizing South African investment muscle behind the efforts of reconstruction. Finally, it's to talk about the African continent. South Africa today is the biggest African investor in other African countries. We're the sixth largest investor on the continent with an FDI stock in 2018, last available figures, of more than R500 billion. So we also play a critical role in stimulating growth across the continent, which helps to create more markets for South African goods and creates jobs for South Africans and opportunities for local and smaller entrepreneurs. I would like then to really leave a lot of the detail in Trudi's hands to share with you for the opportunity to share the rationale, the context, and the structure with you. Trudi, over to you.
Thank you very much, Minister. Good morning, colleagues, members of the media, ladies and gentlemen, and thank you for joining us this morning. As the Minister mentioned, I'm going to provide some of the details of the conference, but I think he's touched on all the main aspects, so I'll keep my remarks quite brief. As the Minister has mentioned, the main plenary is on the 18th of November, and that's preceded by a purely virtual event on the 17th of November. Now, I think it's important to underscore that all precautions will be taken to ensure that the event meets the requirements for COVID-19. We expect attendance to be down by 90%, not because we're not successful this year, but because we want to meet the regulations that are in force. So we will have a very limited number of delegates in person on the 18th, but we'll ensure that we cover representation from the private sector, the investment community, listed companies, emerging firms and entrepreneurs, as well as business associations, labor and civil society. Like in previous years, we will also have several ministers who will be present, particularly the day before at the sectoral roundtables, to ensure that there's robust discussion on policy implementation. Floor space utilization at the Sandton Convention Center will be well below 50% in all the venues that we have booked, and screening, sanitizing, and masking requirements will apply. Now, the good thing, of course, is that with a virtual physical hybrid on the 18th is that we're able to accommodate a much broader global audience online. And so far, we've had over 1,000 online delegates who have registered, and we expect much more than that. And we'll also time some of the panels and the discussion, particularly on the plenary day, to accommodate as many time zones as possible. People can register their interest in attending online at sainvestmentconference.co.za. So that's the conference website, sainvestmentconference.co.za. And as I mentioned, it will be streamed on the day. It will also be broadcast by SABC. Now, in terms of the content focus areas for the conference, on the first day, like in previous years, the opening will be by the President. And this will include an update on investment commitments. He had already begun doing this in the Reconstruction and Recovery Plan, but he'll give more details around the health of the investment pipeline and also linking it to the Economic Recovery Plan. A lot of investment, of course, turns on the enabling environment. So there will be a discussion of the structural reforms that were agreed upon by all the social partners ahead of the Economic Recovery Plan being adopted. I think it's it's a positive step that we no longer talk about reforms in general, but that there's actually a specific set that all social partners have agreed upon. The president will also talk about infrastructure as a key element of the recovery, but also all of the other elements of the plan, particularly the sectoral plans that underpin the growth story in the economy. After that, there would be a panel, and I think the key here would be to emphasize the story of resilience and adaptation to COVID-19 and the opportunities that have been opened up by a new way of doing business, a new way of thinking about supply chains, and also future opportunities. As Minister mentioned, the focus is on consolidation, but we will also, of course, profile new investments that have come to bear. But the idea is that we are, in a sense, midway through the investment mobilization drive, and we need to take stock about on where we are. Finally, so the conference is half a day on the plenary day on the 18th. I think it's very tight focus on a few key issues, and then the president will close, having reflected on what companies have had to say, the key success stories that have been shared, and the opportunities that have been presented. He will close by then also demonstrating what the way forward is on policy implementation and what government's commitments are. Now to go back to the 17th, which are the sector focus panels. And how we're going to run them, there will be 3 sets of 3 running concurrently. There might be slight changes towards the end, but certainly the framework is to have 3 by 3. And so, as Minister has mentioned, there will be one on energy. I think it's quite well known what the issues are there, but also thinking about opportunities more broadly that exist within the integrated resource plan. There'll be a panel on small business growth opportunities, particularly looking as to how small businesses have fared under COVID, those who have emerged and those who also have to think about their survival going forward. There'll also be a panel on land reform and unlocking agricultural value chains. We've seen some steps in the land reform process, different elements of it in terms of releasing land, in terms of the sector itself thinking about a potential development agency that's run by the sector. So there are various partnerships and opportunities that are unlocked in that value chain, and that sector will focus on that and highlight that land reform is supportive of developing agro-processing and related value chains. Then the next set of 3, we're going to look at infrastructure, investment, and impact. We've seen developments with the infrastructure fund coming into being operationalized. We've seen projects being gazetted, but of course there'll be a further update, especially coming out of the roundtable that was held recently with the private sector. Of course, infrastructure is an ongoing discussion. It's a big program that's going to last at least for the next 10 years in its current form. So we will have some progress to update that conference. On mining, I think in mining, in the recovery plan, there was a very concrete target to capture at least 3% of the global exploration target. That's quite exciting in terms of revitalizing mining and ensuring that it is indeed a sunrise industry. We'll be looking at the commodities of the future, which we have in abundance: vanadium, nickel, PGMs, but also those industries which have been the backbone of South African mining to date and which are still active and attracting investment. Then there'll be a panel on ICT and digital, particularly focusing on the services that South Africa could excel in through unlocking the digital economy and also playing on the global space, with, of course, policy developments on spectrum release to be discussed. The next frame of 3 would be opportunities in impact investing and blended finance. In previous years, we used to have a side event with the impact investment community showcasing investments, the kinds of investments that support the sustainable development goals. But this time we will have it as a panel, just in terms of the restrictions and the constraints that we have. And once again, this will be co-hosted with Impact Investing South Africa, where they will showcase themes around developmental finance and those investors who are looking for more than just a commercial return, but also social, environmental, and other bottom lines. Minister has talked to tourism and hospitality post-COVID. There'll be experts talking about the opportunities that are coming from that. I mean, personally, I think possibly this is the moment for ecotourism to shine, both in terms of supporting a green recovery, but also in terms of catering to a post-COVID world where the outdoors and social distancing will be with us for some time. But there'll be experts who will talk to the various aspects of tourism and how the whole value chain can thrive even after COVID. Then finally, there'll be a panel on manufacturing, localization, and the opportunities of the African Continental Free Trade Agreement. Of course, underlining the point that even though localization and building the South African productive base is a big part of the recovery plan, it's not just about being inward looking, but it's about building for the rest of the continent and being a manufacturing base for the rest of the continent. The way the panels will be structured would be that in each of them we would hope to have a diverse panel that will include the minister who's the custodian of policy in that area, business leaders who are key investors, and also voices from labor and civil society. So this will create an opportunity to have a sense of how the social partners think about the opportunities in each of those. And of course, we would welcome interaction virtually. As mentioned earlier, the sector panels the day before are virtual only. So those kind of the topics that we're going to cover in terms of the discussion areas anchored in the economic reconstruction and recovery plan. But of course, the president will also talk about the institutional and capacity, state capacity enhancements that have been brought to bear to ensure that the recovery plan is implemented, but also that the constraints to investment are being addressed. Invest SA will, of course, be there to also provide support in terms of thinking about those day-to-day issues that affect investment. But of course, the president will also talk about the presidency and the office, the Infrastructure and Investment Office in the presidency. He'll talk about Project Vulindlela, which is a way to think about unblocking constraints to investment and to economic activity. And will also reinforce our commitment to improve ease of doing business. But we'll leave most of the detail, most of the updates and the policy implementation for the president and other participants to discuss on the day. So I think I'll leave it there. I've given the website multiple times, sainvestmentconference.co.za will be kind of the content hub for the conference this year. And going forward, we'll make sure that it's a live portal to reflect what is happening on the investment landscape in South Africa. Thank you.
Thank you, colleagues. Before we open floors for questions, I just want to apologize. We've got our acting CEO of Brand SA. I forgot to introduce him. He's sitting here in front. Is Trudi. She's also here with us. She is part of the delegation. So without any waste of time, we'll take questions from Pretoria. Is there any question? Introduce yourself and the organization or the media house that you are representing. Okay.
You forgot me already, said well. John Fraser from ZA Confidential. Nice to see you again, Minister. It's been quite a while. Two questions, if I may. We do fully understand the context of this conference. Times are not normal. But you seem to give a rather disheartening picture of what's happening. How many of the pledges which were made at the first two conferences have actually evaporated and disappeared? How much of that money is never going to be invested? And secondly, how much is at threat? What are you trying to recover through this exercise? And secondly, it's related to today's topic, but maybe not directly. The master plans. What's happened to them? You sign documents at these events, but there's never actually the substance. You don't publish them, or if you do, it's a pretty untransparent process. Are you going to try harder to convince people that this core element of the DTIC's manufacturing strategy is actually important, is actually happening, and give examples, give us the stuff, because there has been very close to a silence, a black hole in your department over these particular issues. Thank you.
Okay, John. Another question? Another question? Okay.
Hello, Sidwell. Thank you very much. We do have questions on our media WhatsApp line. The first question is from Lamis Omraji from Pin 24. They have asked, although this conference will mainly be focused on the health of existing investment commitments, is there a particular target for new investments this year? And then we also have another question from Angelo Coppella from CGNT. They have asked, they've asked two questions. Please provide a background of which sectors the 644 billion rand worth of commitments was committed to. And he has also asked what practical policy progress has been made since 2019 at the South African Investment Conference event. Thank you.
Okay. Can I give over to Minister to respond? Is there any question?
Thank you very much. Let me start with John's question. Hello, John. Good to see you again. John, let me start by saying, while the global picture is very challenging, and we want to be upfront and acknowledge that, we think that the South African storyline has a number of positives, and that this investment conference can, in fact, highlight those positives. We expect that foreign direct investment can pick up off the back of the Continental Free Trade Area. And you will recall that in 2018, we had something of a bumper year with foreign direct investment. And so we're seeking to put our storyline out there more clearly. None of the pledges that have been made have disappeared. No company has written to us to say they now withdraw their pledge or they will no longer continue. What has happened is a number of these pledges, and they amount to about 9% of the total, have indicated that they will slow down the implementation, certainly in part because of COVID-19. And we, in some cases, this is to do with market demand, where company business plans are based on an assumption of the number of widgets that the market would need. When the global economy slows down, it means exports are likely to be lower. When the South African economy, so much of its traction about 25% of our GDP is generated by exports. I mean, it's an extraordinary amount if you think about it. So in some cases, it's slowed down. What is, I think, a very heartening story is the number of projects that have actually now been completed. Now, I'd love to tell you that, but that will no doubt be one of the important things the President would want to announce on the 18th of November. But I think you'll see a significant number, not in progress, not just construction, but actually at the point of turnkey where production can now start. To give you one indication, and you'll forgive me if I don't give you more, because as I say, the conference we want you to attend, and there should be certainly something that we can say there too. But you would have recalled very recently the announcement by Aspen Pharmacies that they will be producing vaccines for the Johnson & Johnson group globally. Now, these are COVID vaccines. It would be a very significant, it would be the first and thus far only committed arrangement to produce COVID vaccines on the continent. That project was announced, the building of that facility was announced at the 2018 investment conference. And it's taken a while for them to complete the physical construction, to get the standards put in, bring in the machinery, create a world-class pharmaceutical production capability. And it can now easily be repurposed to do vaccines. And as I indicate, that one is now ready. Basically, it's been completed. So it gives an illustration of the kind of things that the investment conference has been able to galvanize and to identify. John, you raise a good and important question on the master plans. And I must say that we will need to make sure that the department assists in keeping you on the mailing list of the parliamentary briefings, because I've spent a number of hours recently in Parliament giving Parliament a very detailed report on the implementation of master plans. We took each of the master plans, we said this is what we would do, and then we took Parliament through what we've actually done. And I can't obviously in a few minutes really summarize what is, or adequately summarize what has been an extensive piece, but to take an example to illustrate. We signed a master plan in October last year with the poultry industry. And they committed to increasing the level of investment in poultry farming. And we committed to a step of actions on the trade front. And in the first 8 months of this year, not only were we able to get about 700 million rands of fresh investment in poultry, and government held to its commitment to adjust the tariffs. But here's an interesting number, and I hope one of the technical people will make sure that I've got the period right. But for the last 8 months, we've increased the number of birds produced in South Africa by about 1 million birds a week. And that's a significant increase in local poultry production. So that's one example. Let me take the example of the sugar master plan. It is a master plan that early in the COVID period we finalized. In fact, we're looking now for a date when we can virtually sign the master plan, but it's been completed. The Competition Commission has published an exemption to the industry to enable them to get together to implement some of the commitments that they've made in the master plan. And we were delighted to see that the level of imported sugar for the first 8 months of this year has gone down compared to the similar period of last year. We took the parliamentary committee through the clothing, textile, footwear and leather master plan. And colleagues from the media would recall a recent public announcement by the Foschini Group of a significant localization in their value chains, which included something of the order of 500 new jobs in South Africa in product that previously had been imported. And so that's a combination of investment and sourcing policies by the Foschini Group. And then the President announced, when the Economic Reconstruction and Recovery Plan was announced in Parliament, he referred to the fact that in 2019 we reached the highest ever level of car production in South Africa's history, and also reached the highest level of export of vehicles that we've had to date. Of course, in 2020, we've now had to factor in the impact of COVID, but it showed the effects and the positive story around the master plan. So it's a good question. I hope that we would have a further opportunity in future to provide more details, and we could certainly provide some of this information separately to members of the media that may be interested in it. And why I think the question is important is because the master plans are one of the instruments that we're using in the investment conference to bring together a new partnership between government and the private sector. And you will recall that at last year's investment conference, in fact, 2 master plans were signed at the conference itself. On the question by Lamise Umarji, as I understand the question, I'm sorry, I was just checking for some of the data, but as I understand the question, it's about what is the target for fresh investment in the master plan. Now, we have a 5-year target of 1.2 trillion rand. For us, in this difficult period, the minimum we should seek to do is ensure that the 660 billion rand, 664 billion rand of investment is actually translated from pledge to action, construction, digging of mines, and so on. But we will have an additional set of fresh pledges, and that I think is going to be one of the storylines. It won't be the only storyline for the investment conference. And at this stage, we are reasonably confident that we will be on track in terms of the overall 5-year target, that proportionally we are likely to achieve where we should be in year 3 of a 5-year target. On the question from CGNT, which sectors the 664 billion rand investment is located in, I would venture to say pretty much most sectors of the economy. A very significant part of that is in mining, quite strong investment in telecommunications and digital technologies. There's food production, tourism, other manufacturing. A big commitment was made by the auto sector, by poultry, by clothing and textiles, and so it's spread across different sectors of the economy. And what we're seeking to do for the period ahead is to try to encourage more investment. Of course, any investment in whatever sector is great if it increases the stock of capital in the country and creates jobs. But a particular emphasis on seeking investment that can utilize the new opportunities of the African Continental Free Trade Area. If the opportunity is to be realized of increased trade, it needs increased investment. You can't trade if you don't make things. So you can only make things when you invest in new manufacturing capabilities. So that's really where we are. On the policy progress, they're in a number of areas, and again, the President will speak to it in the investment conference. But you will recall that in 2018, we committed to ensuring that there was a reform of energy policies, that they would include some decisions around Eskom, and a number of these have been progressed quite significantly. There were also commitments to restart the stalled renewable energy bid windows, and we've now announced the next bid window. Minister Gwede Mantashe has published those. We made commitments as government that we wanted to ensure that the spectrum provision of spectrum was unblocked because it had been in a process where there was limited transparency, industry was not sure what was going to happen, and investment decisions were on hold because many of them require additional spectrum. There is now greater transparency, the process is far advanced, and of course the formal announcement will be made at the investment conference on the dates and progress on those. So I've taken a couple of these. I'm sure Trudi may want to mention one or two others in due course. Some of the big blockages was the lack of a real partnership at sector level. The master plans, which is John's question, has given me an opportunity to point to a few of these. Water use licenses were a really big constraint. Companies were coming to us and say in many cases they needed to wait 18 months, 2 years or longer for a decision. Those have now been unblocked, and the President has previously announced what the new period is within which businesses can expect us to make a decision one way or the other and to announce that decision so that there's greater certainty in the market. So I've just taken a few of these and you're asking the good questions that I think to some extent the investment conference will be an opportunity somewhat more in more detail to highlight those. The meeting that Trudi referred to on the 17th of November is also an engagement where cabinet members responsible for all of these policy areas will engage with panelists, which will include business representatives, to talk about the progress that they have made. Thank you.
Colleagues, we'll take the last round. If there are questions from the floor or from the WhatsApp.
Thank you, Silva. We do have two more questions. We do have two more questions from the WhatsApp line. We have Lindy Donley from Business Day has asked, please, can you provide some further detail or examples of how the conference will tie in more detail with the economic recovery plan, and what areas of the economic recovery plan will be covered in the conference? We also have Zingiswa Ndayi from Channel Television News, Nigeria. As a chair of the ministerial body tasked with finalizing negotiations on the terms for the commencement of the preferential trade under the African Continental Free Trade Area, what priorities will the ministerial body be pushing for the head of government? And one last question that just came in. They have asked, I think it's Atwal Ramini, I'm not too sure about the media house, but they've asked, in terms of participation in the South African Investment Conference this year, can you please give us an idea what the interest is like from foreign investors and their local counterparts? Oh, he's from Alliance News. Atwal Ramini is from Alliance News. Thank you.
Okay.
David Morgan from EMCA. Trudi, you mentioned that the Reconstruction and Recovery Plan is an important feature of the conference, and that there's an opportunity to present a whole package of this plan to investors. I was just wondering, what do you think about the critique? One of the biggest ones that what it doesn't have is that it doesn't have a clear indication of the capital that's coming from the public and separately from the private sectors. That's clear cut in the plan. In fact, we've had the former President Mamoepa over the weekend go so as far as to call for a separate document on this plan that would indicate how much of capital would come from both private and the public sector. So there seems to be a deficit in that regard. I'm just wondering whether or not you think this will be found wanting at the investment conference, and if indeed you would consider or government would consider publishing a document on that frame.
Okay. Gone? Nobody. Okay. Minister?
Thanks. I think starting with Linley's question around how does the investment conference tie in with the economic and recovery plan? I mean, I suppose the whole point is that this is looking at the recovery plan from an investment lens. So all of the elements in the plan, or most of the elements in the plan, would require some private sector participation or partnership, or alternatively would unlock private sector participation. So if you look at the reforms that are discussed in the plan, those are the ones that I think we all agree on in terms of, reducing regulatory red tape, giving certainty on renewable energy, etc., that those are needed to ensure that investment proceeds, and those have been seen to be blockages in the past. If you look at infrastructure, it's clear that there you need investors as partners. Now, there's been a lot of targeted engagement with those investors in particular who are interested in infrastructure in the lead up to the investment conference, and also in the symposia that have been held by the Investment and Infrastructure Office. But of course, the investment conference brings it all together, because there would be many other investors across different sectors who would bring to bear investment in their sectors that also supports the infrastructure drive. So I think the two, you can't even really separate the two. You need investment to make certain aspects of the recovery plan viable. And I think this touches on the point, the question that Devon raised, which I think is a very important question. And I think there's got to be many various levels to look at it. I mean, to begin with, when the president makes an announcement on policy, he's making a strategic announcement on priorities and where the country wants to go. But that has to be met by a financing leg. And it's accepted practice, and also, I suppose, in the Constitution, that it's the Minister of Finance who's responsible for financial affairs and sets out a budget. This year, we've had 3 budgets. The one in February, the supplementary budget, and also, well, not 3 budgets, but 3 articulations of the budget, and also the medium-term budget policy statement, which gives the 3-year view. And I think in the MTBPS, without being detracted from issues to do with the investment conference, but in the MTBPS, there was a clear enunciation of what the financing mix is going to look like for the strategy set out by the president. On infrastructure, we're very clear. One has to buy into the thesis that it's a public-private partnership. The state will need to draw in private sector financing. Now, we can talk about risk aversion, which has been a feature of the South African economic policy landscape. But the point about risk aversion is that we have to reduce it. We have to work together. There really isn't any other thesis that makes investment work, given our fiscal space. The MTBPS also, of course, goes on to talk about how it meets the public sector borrowing requirement, as it always does, in terms of projecting a deficit, going into bond markets, and presenting a picture of the budget trajectory that is intended to, as far as is possible, signal consolidation, responsible consolidation, that's not going to cut off growth in a very difficult period, with the understanding that the whole world is going through this crisis, and there's an acceptance that spending will be above normal, deficits will be above normal, and we hope that in terms of the risk premiums that we pay, our debt won't be too expensive because money has to go somewhere. We will attract some portfolio flows, and we hope that the story that we've told about consolidation means that we're not punished for trying to support the economy. So I think, from that perspective, from infrastructure and many other parts of the president's plans being funded with the private sector, to us going into the bond markets in general, there's a clear fiscal framework that supports the economic and recovery plan. The one area which I suppose is strictly or mostly on government's books would be on the mass public employment. And there the president made it clear that to wait for the private sector to kick into gear will take some time. And so government would have to put up its own resources to reprioritize and ensure that there's money that goes into public employment. Public employment, not pointless employment, but that's directed to the common good, supporting community initiatives, early childhood development. It's not just about mostly women who participate in that industry and are able to secure their livelihoods. It's also an investment into those children and in human capital in the future. So I think there it's accepted that the budget made provision for it to come mostly from the private sector. And then, of course, investment supports private sector investment, where the state is not involved at all, is what this investment conference is about, where in a sense, the recovery, the sector master plans. If you look at those master plans in detail, there are investment commitments by sectors, for sectors, to generate economic activity. So one doesn't have to budget for that, but one, of course, brings policy tools and policy implementation. So, I think the critique is important, but if you look at the budget framework, and also if you buy the fundamental thesis that it has to be a public-private partnership, I think that's the path that's being set out. But of course, one always wants to hear alternative views and other suggestions. I leave it there. Thank you.
Thank you, Trudi, for that. So I think Trudi's covered Ms. Donnelly's question, and I should really just say, of the 9 interventions identified in the Economic Reconstruction and Recovery Plan, 7 of them would be a focus at the investment conference, both the session on the 17th and the 18th. Of course, we've also identified 6 enablers, and the very first enabler we identified was resource mobilization. And the resource mobilization is not just public sector, but private investment. So this will be a very big part of our work. On the question raised by Channel TV News from Nigeria, what are the priorities that we will be setting as the African Ministers of Trade for the Heads of State meeting? Perhaps just by way of context, President Ramaphosa will be convening a summit of African Heads of State in December. And this meeting will be considering progress that the Ministers of Trade has made to date on the implementation modalities of the Continental Free Trade Area. Whereas Europe took decades to finalize and refine a set of modalities, we recognize we'll have to do it much quicker in very difficult conditions. So in the COVID pandemic period, African Ministers of State of Trade have been engaging and meeting. I would say for the December meeting, there are 4 critical priorities that we would want to raise with heads of state. The first is to fix a date for the start of trading. That date should be early in 2021, so that we are able to see the benefits progressively and incrementally coming to African countries with the start of trading. The second one is to finalize rules of origin in a number of products so that we are able to have value addition on the African continent. A free trade area where African economies only add a very small value to goods that have been largely made in Asia or Europe or elsewhere is not going to unlock the enormous opportunity of a free trade area. So those rules of origin are important. They need to set quite tough targets to ourselves so that more value is added. This is what we call the Made in Africa, Grown in Africa campaign. The third area is to identify a meaningful number of tariff lines. We already have a significant number agreed, and we're working around the clock now to increase the number of tariff lines that countries agree they will bind themselves in the Continental Free Trade Area. And the fourth and final one is an industrialization vision underpinning the start of trading, so that we are able to see the free trade area as the opportunity to stimulate fresh investment and increase value chain production on the continent. I mean, I give perhaps the most cliched example that Africa is the world's producer of cocoa that goes into the manufacture of chocolate. And African chocolate manufacturing is tiny. So quality chocolate manufacturing is located elsewhere in the world. So it will take an enormous amount of effort to ensure that we create the conditions for private businesses to seize the opportunity to produce more chocolates on the continent. But you can take almost any value chain and see, and this is hard work. It's work of many years. But when you land it, you embed deeper levels of localization and jobs on the continent. On the question from the journalist, I think it's Mr. Dlamini, on the level of foreign investor interest in the conference. Well, Trudi has given us the aggregate number. We've had more than 1,000 investors already signing up to join virtually the conference. I met with the French Minister for Foreign Trade, and he indicated that French investors were keenly looking forward to participate. We've had a meeting with the Japanese minister responsible for economic affairs, and they've indicated Japanese investors are interested. I met recently with the US Chamber of Business, and there were a number of companies, many of them already in South Africa, looking to participate in the investment conference. And we're in discussion with Germany's ambassador to South African, Martin Schaefer, about increasing opportunities for engagement with the German private sector. And the Chinese ambassador has reached out to indicate they're very interested in taking part. So these are just anecdotally a few examples of the kind of interest that is being generated by foreign investors. On the question from ENC, I think Trudi covered that. So thank you very much.
Thank you, Minister. I understand there is one last question. Okay.
Thank you, Sidwell. There is one last question.
Shoot.
We have one from Sipasihle Georgia, from the Business Reports newspaper. He has asked, or they have asked, if the Minister can please share what is the investment target at this year's conference. He remembers the target was 300 billion rand in the inaugural conference, and that's about it.
Okay. Investment target for this year. Do we have investment?
Thank you very much to the question from Business Report. Let me start by just recalling that at none of the investment conferences did we set an annual target. Our 5-year target is 1.2 trillion rand, and we achieved just over 300 billion in 2018 in that first inaugural conference. But if we are to achieve the target of 1.2 trillion divided by 5, then that would require us to have an annual target of 240 billion. In the first two investment conferences, we've overshot that target. So by year 3, we should be at 720 billion rand cumulatively. Of course, it's not to say the 1-year target. This is the cumulative effect over 3 years. The actual announcement the President will make to share with the nation the extent to which we are able to reach that target, the extent to which COVID has either hindered our efforts or the extent to which our efforts to promote South Africa as a investment destination has enabled us to reach that target. That I think you'll have to wait for the 18th of November to get that reply, not only because it is an announcement that needs to be made by the head of state, this is the President's conference, but also because we are still in discussion with investors to finalize pledges. But so at none of the years have we set a prior or pre-conference target, but we've always announced at the conference the level of new investment pledges that I've received. I hope that does help a little bit to the business report question. Back to you, Sidwell.
Thank you, Ministers. Colleagues, I think we have come to the end of our briefing, if there's no question. And on an issue of master plans, always or every time when Minister is presenting to the Portfolio Committee, we circulate the document after, immediately. So John didn't get them, but you send it to John also now, my brother.
Those briefings said, well, please don't misquote me.
Yeah?
I did follow those briefings.
Okay, I thought you didn't have it, my brother. Okay, that's fine.
My point is, why doesn't the Minister interact with the media?
Okay, not that you didn't have documents. Okay, thank you very much. Okay, colleagues, it is just like that. We circulated the documents and we stated that we have completed 5 master plans. We are busy with 2 new ones. In the next 5 months, we will complete them. But we will create time. Minister will interact with media. Time will be created. Thank you very much for gracing our occasion. Thank you.
Thank you, Sidwell. Thanks.